last here we are going we broke structure to the downside, is it?
Yes.
It means here we had a lot of bearish candles, is it?
Yes.
Now, if we have a lot of bearish candles, we are going to look for the last bullish candle here before bearish movement to the downside. Okay. Yeah, so that one is one what we are going to use is our order block, and we call it a bearish order block because it is an order block that we expect for us to sell. Okay.
Okay.
It is going to be a bullish candle, but it is what we call bearish order block. Okay.
Okay.
Yeah, because it is going to allow us to go down to sell. Okay. So supply zone is a whole area like this. The area of consolidation here is our supply zone. Okay. But we are not going to trade the whole area here as our area where we are not going to do this as our point of interest. Okay. We are going to just use one last opposite candle. Yeah, and that's our so when we try to relate supply zone and demand zones to the issue of order blocks, is like we are talking about bearish order blocks and the bullish order blocks. Okay.
Okay.
Yeah, so a bearish order block, we draw it in supply zone. Okay. Yeah, but a bullish order block, we draw it in a demand zone. Okay.
Okay.
You understand that?
Yes.
So you can actually see that that's how we can determine a supply zone. But when we come to demand zone is just the opposite of that. When we break structure to the upside, okay, we take liquidity here to the upside. Here, this becomes a break of structure to the upside, is it?
Yes.
And we can actually see a very strong momentum to the upside, which broke structure, okay, and took out liquidity here. So now what are we actually going to do? We're going to look for the last bearish candle here before we had this strong bullish movement. Okay.
Okay.
That's going to be our order block, our OB.
Yep.
Okay. So what we wait for retracement here, then we continue selling. Okay. That means this area here, we have had some sorts of consolidation here before the market broke straight to the upside, is our demand zone. Okay.
Okay.
I think you understand that, is it?
Yes.
So that's how we can actually try to relate supply and demand with ICT, or what you call is order blocks. Okay.
Okay.
So now when we talk about supply and demand, we are not going to deal with supply and demand, but I'm just going to show you these sorts of structures which are very important. Sort of structures, they are always explained in supply and demand strategy. Okay. But since supply and demand with with order blocks, they relate. They are all smart money concepts. Okay. So some of these concepts I usually try to relate. For me, I usually combine them and create a very nice strategy. Okay. So you can actually see we have something called a rally. Okay. Rally, which means buyers exceed sellers. You see this explanation, is it this one?
Okay.
A rally is a movement to the upside. Okay.
Yeah.
We have base. Okay. A base that says buyers and sellers are equal. It means that it is a consolidation. Okay. It's a consolidation. It's what we call base. Okay. But when we talk about drop, you know what is drop? Is going down, is it?
Yes.
We drop, we are going down. So these are the major structures that we actually try to see and try to use them so that we may actually get something additional skills and knowledge. Okay. When we analyze, we can actually analyze in an easy way. Okay.
Yep.
So there are some movements according to supply and demand, but which relates with order blocks. Okay. There is something you can actually see, a continuation zone. You see this? A continuation zone is formed when there is a rally, then a base, then what? a rally. So it is shortened
Another
as
rally.
RBR. So rally base rally, okay?
Okay.
So remember when I said rally, the movement to the upside, is it? So if it is a movement to the upside, it means that's rally, the movement to the upside. So it's like this, upside, is it?
Yes.
A rally. Then we have a base consolidation, okay? Like the market is consolidating. Then we have another what? Rally, okay?
Another rally. Oh.
So this, you can actually see this is like some sorts of a bullish and an uptrend, is it? Just like we created that, we went a little bit down, then like that, okay? Like we structure here, okay?
Okay.
So this one is just like what I was explaining in the beginning. So that's how we can actually say it is related, because this is some sort of correction here, some sort of consolidation, okay? For a break of structure to the upside. Now again, we have this is a continuation, okay? Because we are continuing going higher, is it?
Yeah.
That's why we say it's a continuation movement. But that is a continuation movement in a bullish movement, in an uptrend, okay?
Yeah.
We are going to see how in a bearish is just like you will see a drop, then you will see a base, then another drop, okay?
Okay.
Do you understand those concepts? Or maybe I'm confusing you. You don't know why am I explaining this?
Yes, I can understand.
Okay, nice. So actually a drop is like that, is it? Movement to the downside.
Yes.
Then you have a base, some sorts of consolidation, okay? After you see a base, you see a drop again, okay?
Yep.
Which means we took this liquidity here, okay? That's how I'm trying to explain in according to to what we talk about when we talk about ICT, when we talk about liquidities, okay?
Okay.
Here in supply and demand, they don't talk about liquidities. I don't know, this is liquid, no. But for us, as you remember, I explained to you, liquidity is found in support and resistance in the area where we have consolidation, okay? So to our knowledge, you just see this like a liquidity grab, is it? The market is taking out early buyers, is it? Going down.
Yes. Yeah.
Now, you know what is doing after taking out liquidity, we are expecting to find our order book here, okay? Somewhere here where there's this movement that took out liquidity and broke structure. We can actually see liquidity here and also break of structure, okay?
Okay.
So this is our order block here. So we are waiting for the retracement, okay?
Yes. Okay.
Then we can sell, okay? So that's how we can actually understand this. That's how we can actually understand when we talk about what we can actually say continuation trend, okay? They are just structures that we will actually see in the market. And some of them we have already seen in my analysis when I was trying to explain to you about break of structure and liquidity, okay?
Okay.
But there is what we call reversal zone, okay? Because the market will not actually go up all the time, okay?
Yeah.
You see some sort of reversal, but you may see reversal, but it's the same. You will just see. Let's just explain so that you may understand. Let me not talk much. So actually a reversal zone is formed when there is for a bullish now, okay? For a bullish movement, okay? Or this is in a bearish, okay? In a bearish, you will see a rally, then a base, then a drop.
Okay.
Let's say when you see a rally, okay? When you see a base consolidation, and then you see a drop, that means it's structured block to the downside, okay?
Yep.
Because we saw a rally. Now let me show you in this. So you see a rally, okay? A rally to the upside, okay? Then you see a drop, a base, not a drop, a base, okay? A base. See a base consolidation, right?
Yes.
And then you see a drop. You get that? Now, where did the structure breaks? Where did we break? Down or up?
Down.
Down, is it?
Yeah.
So if we broke down, this was a liquidity in support, is it? Liquidity taken, okay? At the same time, we broke structure to the downside, is it?
Yeah.
Now we can actually say this area we can see a very strong movement to the downside, okay? So we can actually find, maybe we can find some imbalances there, okay?
Yeah.
Now we just draw our last bullish candle before a bearish movement to the downside, okay?
Okay.
So we actually expect to see a retracement to our order block, and then we can sell, okay?
Yep.
You understand that?
Yeah.
So that's how we can actually understand that. That is for a bearish. For a bullish movement, you can actually see a drop, then a base, and then a rally, impassive rally, okay? It means it is very, very strong movement, okay? So when we want to draw this, we draw it just like this. We have a drop, okay? A drop, is it? To the downside.
Yeah.
We have a base, which is actually consolidation, okay? And we have a rally, a passive rally, okay?
Yeah.
Yeah, structure, where did we break? We break to the downside or to the upside?
To upside.
The upside. That means we are looking for which opportunities, selling or buying?
Or buy.
Buy. Yeah, so if we're looking for buyings, and as you know, I usually say when you have impassive movement or a movement with a great momentum, we will actually see some sorts of imbalances, okay? And so you wait for the market to fill those imbalance and detach our order block, then we can actually buy, okay? Yeah, so that's a simple. I just wanted to show you this, some sorts of structures that you may actually try to understand. When you are trading, you may know what do you see. What do you see in the charts? You see a rally. Yeah, this is the rally. You see what? You see a base. You see, again, you see a rally. Again, you see a retracement. Like these structures here, okay? You can actually see. This is what I was explaining. So you can just see them when they are drawn in an easy way, okay? For us, we will not draw the whole area here as our point of interest, okay? This one. We just draw last candle here, last bearish candle. That means we have a very, very nice risk to reward ratio. Instead of entering here, you see, if you enter here, you see this entry here, is it? If you enter here, now your stop loss here is a very big area, and you are focusing to take your TP here. Is it?
Yes.
It will be a very bad trade. You know, your risk reward ratio is very bad, is it? Maybe 1-to-1, because you are entering here, you are exiting here, and you are entering here, you expect to get a loss here. So it's big area. But when you enter here, it's a very big movement up to here, and the loss is just a little bit, is it? So you have nice risk to reward ratio. So it's better to use order blocks instead of this demand zone and supply zone, okay? And you can actually see for a selling opportunity, we will actually draw our order block here, last bullish candle, somewhere there, okay? So we enter from there up to this swing low, okay? This swing low. So that's where we put our TP here. We put this area, so we can actually find a good risk to reward ratio, our stop loss here. So very nice, good risk to reward ratio, is it? So you can actually see how it is nice when you are trading order blocks instead of trading supply and demand zones, okay? Yeah, because supply and demand zone have a very big risk. You
But
have,
if the,
yes.
I mean, if the price never, oh, it's okay. I saw the
If
how the price
price,
going. If the price, yeah, never touch the order flow, but touch the demand row,
yes.
do we still trade or?
No, we don't. We don't. We don't.
Oh,
We don't.
okay.
We don't.
Yep.
Because we don't trade demand and supply. I was showing
Yep.
them so that you may actually see like how they actually
Mm.
relate, and how you can actually
Mm-hmm.
find a good risk to reward ratio in our
Yep.
strategy. You can actually
Yep.
see demand and supply has very nice, big, very big. You may say you are in a very good place here. You can actually say, oh, it is nice for me. Once it touches here, I buy. But you don't know what will happen. The market might just keep going down. And once it reaches, it goes up. Okay.
Yeah. Yep.
Now you were in negative from here. You are in losses from here, up to here.
Mm.
You can even give up. You
Yeah.
can say, it's now full of losses. But someone who is, we as traders who trade demand and supply, we just wait for our order block here. No matter where, maybe our order block may be here.
Yes.
Okay?
Okay.
So you don't know where your order block might be. So maybe here in the middle here. Okay. So you just draw your order block. Because it is a candle, it might have started. If it is a candle, it might have started to be here up to here, a candle, a last bearish. So you draw this as your order block. Okay.
Okay.
You wait for retracement here and then you buy. Okay.
Yep.
Yeah. So that's how we can actually simplify our trading. We don't need to trade the supply and demand. They are very big risk to reward ratio, very big. And most of the time
Yes.
you'll be pressurized. You'll see you are in negative for a long time. Yeah. So you can actually see from here what they actually call rally base. So here is just how can actually, this is how demand zone is drawn. Okay. This is how demand zone is drawn. And you can actually see
Okay.
the money is
Yeah.
drawn in the whole consolidation area. Okay. The whole consolidation area. So sometimes it's more dangerous. You can actually see here, this was liquidity. This was equal low. Okay. And you see what the
Yep.
market did here.
Yep.
So actually it's dangerous. Sometimes those people who trade this may end up in losses. So you have to make sure you draw just your order block. Although here I can actually say our order block was this one and was not mitigated, is it?
Yeah.
But actually, we can clearly see here we had imbalance. So the market filled imbalance there. We had so the market filled imbalance, but did not touch our order block. But it is more safe when we just trade like this. Some people always trade. Someone might have traded supply and demand and maybe taking a trade here, putting a stop loss here. Okay. Some of these traders may be taken out of the market. Okay. Because you see this movement from here. This was a movement to take out early buy. Very strong momentum to take out early buyers. Okay.
Yes.
That's why you can actually see this week here took out some early buyers. Okay.
Okay.
So you just have to make sure you trade safely, follow your rules. So here we can actually see how our order block was respected. So you don't have to make sure you find entries all the time. Just make sure you follow your strategy. This was a drop-based drop. Okay.
Yeah.
Actually, see this was an area where we had some sorts of consolidation here. Okay. We just draw our last bullish. This is a last bullish candle before it dropped to the downside. Okay.
Yeah.
So we just draw this. So we have this green, this gray colored, order block. That's our order block. Okay, we have this gray colored candle here. So this is where we are going to enter as people who trade what you call order blocks. But actually, you can see, can you just see here? There's some sort of liquidity happened here because the market tried to create some indication that is actually selling here. Okay, see here. this movement. It touched here and then started like selling here. So people who trade here, supply zone, they entered here, is it? This was the area for them to enter, is it? Now you can actually see is where liquidity. You see this movement here. This movement was just taking this early sellers, this movement, okay?
Okay.
Was just to take this because for us, our order block is right here. Now we have to be very careful. You know, our order block is here up to here. So we have to be very careful. Just know that we have to make sure once the price is in our order block, that's where we sell, and we just put our stop loss here. Okay. Yeah. So it has nice risk to reward ratio, and also your entry is more safe. Okay.
Okay.
Yeah. These are what we were talking about, the reversal entries. Okay. We see a rally, a base, a drop.
Yes.
Okay. So when you see a drop, it's a break of market structure. You see a break of market structure to the downside. Okay. This was our, if this was our, we can actually say this was our lower low. Okay.
Yeah.
Our low, consolidation, liquidity, break of structure, draw your order block here.
Yeah.
So for buying is like this one here. You can actually see drop, base, rally, draw, again we buy here. Okay. Yeah. The complicated thing was when we were just talking about liquidity. That's why it is very important. That's why I try to make sure I show you in the charts. Okay. But these ones you can see the rally, consolidation, base, drop. Okay.
Yeah.
You can actually draw your order block somewhere there. Then you can actually sell it. Okay.
Yeah. Okay.
Yeah. So these ones, this as a normal analysis, just normal. I think it's normal. For me, I say it's normal. You can actually see even here we had some liquidity here. There is some sort of consolidation, is it?
Yeah.
The market took this liquidity here and continued selling here, and then went. Okay. So this also an area where there were focused people who trade resistance. You can actually see we had some market hitting these areas, failing to break this level for a long time, is it?
Yes.
So people will say, I'm going to sell maybe here, but the market broke totally early sellers here. Where we are moving with this trend, we are moving down, is it? People believed we are going to keep respecting this level as we keep selling, but the market broke the structure and continue selling. Okay. So you can actually see a very big candle here, very big candle. Okay.
So does it have a new order block
here? Here.
No.
This is consolidation. It's area.
Yeah.
And this is liquidity. Is this a liquidity? It's a liquidity area because it is an area where we don't see strong momentum, but that much of a strong momentum. Okay. Here we see some sorts of consolidation. Strong momentum is here, and we cannot actually see. We see a very strong, but not an actual order block here. But the only thing that makes us fear this area is this. You can actually see this week. Where did I do? Oh, our screen is out. Do you hear me?
Yeah, I can hear you.
Oh, you know, what is this? I don't know what is happening. My screen just sometimes it's hide itself. You see it now, is it?
Yes.
Okay. Oh, we were white. We were here. Here. So I'm saying this is some sort of liquidity. It's not an area you can actually say you can actually sell here. It's not good area. Why? Because of this. You see this long wick. Then you can actually say here we don't have that much of imbalance. Is it very very tiny one, very small, but also it's inside very big wicks. You see wicks, a lot of wicks here. You cannot actually say this is an imbalance because you saw a lot of weeks here, which means buyers and sellers were entering, buyers, sellers, a lot of weeks. Okay.
Yeah.
So it's not just nice to find. You cannot actually say this is a good area for you to say you have a break of structure. Because also we did not create that kind of what we call a downtrend, a clear downtrend. You know, a clear downtrend has to be formed with. You have to see good momentums. Okay, nice.
Oh, so for this liquidity loan, because I'm a little bit confused with liquidity loan.
Yeah, liquidity loan is
can be demand or supply.
I just we have 10 minutes. I just say I was explaining about demand. It's not an area you have to focus with demand and supply. Okay, you don't have to focus with them. You don't focus with demand and supply. I explain them so that I may show you how you can, even if you hear someone telling you about supply and demand, you may not say it's something new to you. You may not say this is new. Can I let no? It's just they don't differ that much. So even if you are someone trading supply and demand, it's just the same kind of thing which relates. Okay. But just different strategy, but they relate. They are all smart money concepts. The only issue is that we have to make sure we know where we saw a very strong momentum. That's the basic. You didn't see a strong momentum. Just here we don't see that much. Here we see this was for liquidity. Okay, just a liquidity happened, and then after liquidity, we don't see that much of strong momentum here. Don't see that much of a gap here. But actually, look at this. Look at this area. Let me do this. You can actually see here. You can actually see very strong momentum. Okay. Yeah. Very strong. We see this one red candle, second. You see very strong momentum. And here we cannot see an order block here because we only see these red candles. Now we are going to spot where our last bullish candle is here. Our last bullish candle is here. And that's why we draw this here as our order block. And this is is showing us a strong momentum from here, 1, 2, and there are no much of wicks. You don't see a lot of wicks here. The candles which are formed are not candles with a lot of wicks. Okay. But look at this area, from this area here. Yeah. Can actually see, you have to see a strong momentum. A strong momentum is a momentum with no much wicks. You see here we have wicks, a lot of wicks. You see this, a lot of wicks, a lot of wicks. These are telling us that we had buyers, sellers, buyers, sellers. That's why you see wicks. Sellers, you see sellers, buyers, again sellers, they went down, sellers, sellers. This means there are some creation of buyers and sellers, buyers and sellers. That's why we see wicks. Okay. Yeah. But here you don't see wicks. That means it is only sellers here. You see a very small wicks. It's all about sellers here. That's why we say a strong momentum. Impulsive move. That structure. Yeah. Okay. Okay. You understand that? Yep. Yeah, just make sure you follow those rules. Simple rules, but you just have to make sure you do them and you repeat them every day. Make sure you don't forget them. Don't get confused with anything. Just follow them. Okay? Yeah. And trading will be simple. Do you understand? Yeah, I understand. Okay. Trying to talk like Americans. Do you understand? So I think I will explain to you next session about what we actually call this one here. No, this is not important in our studies. This one, we have this equilibrium and discount. Did I explain to you premium and discounts? How we can actually collect get our zones. This one. I don't want to explain it today because we only have 6 minutes. Okay. Yeah. Yeah. So I don't want to bring another new topic. I want to make sure I explain about this tomorrow. And here we are going to talk about, let me just introduce it. We are going to talk about premium and discount. Okay. Premium.
Oh, okay.
I think I tried to explain to you when I was saying you when you go to the market, when when things are in premium price, it's not good for you to buy, is it?
Yeah, it's for sale. Yeah,
Yeah, it is nice for
discount.
people who are
Yeah.
selling. They will enjoy because
Mm.
they are selling, is it? But you
Yes.
who wants to buy, it's not safe.
Before discount.
Yeah, yeah, yeah. You are going to buy
Mm.
when it is in discount. When you hear
Yeah.
Black Friday, it's discount price. When you hear,
Mm.
it's the nice
Mm-hmm.
day for you to say, yeah, this is the best time for me to buy, is it?
Yeah.
Yeah. So even if you are going to buy, if you are going to purchase that trading view pro plan, if you want, wait
Mm-hmm.
for Black Friday. Wait for on Friday, you buy it in a discount. Okay.
Okay.
Yeah, it is more safe for you when you buy it in discount.
Mm.
Because it is nice to buy in discount and it is nice to sell in premium. That's what I'm going to tell you.
Mm.
I'm going to explain to you how do we explain this premium and discount in trading in Forex. Okay.
Mm-hmm. Okay.
How will we relate them in Forex? How are we going to actually determine the premium zones and the discount zones in what in trading? And also we have this equilibrium. The equilibrium is the middle. You have here is premium,
Uh-huh.
discount, is it?
Oh.
Here is equilibrium. We have
Oh,
50%. Okay. So 0 to
yeah.
50 is discount, but from
Mm.
50 to 100 is premium. Okay.
Okay.
So here at 50 is equilibrium. It is equal. Okay?
Mm-hmm.
Yeah. So we are not going to deal with this equilibrium. Equilibrium is just going to tell us now that this is an area where there is equilibrium. We don't wanna make decision where we have equilibrium. Okay.
Oh,
We're
yeah.
just going to make decision whether we are in discount or in premium. Okay.
Okay.
So in premium, we are going to sell. In discount, we are going to buy. Okay.
Okay.
Yeah. So I think I don't need to talk much. I don't need to explain more because I will explain
Mm.
tomorrow when God gives us another time to live, another opportunity
Okay.
to survive.
And I will do some more practice.
Yes,
Yeah.
yes. You
If I
just
just follow the chart I sent you today.
Yeah, yeah, you just make sure you do that. Do that because it's already
Yep.
the market is also open, so you can actually analyze,
Yep.
send me the setups, the analysis.
Okay.
I check, I
Yep.
then try to go to the charts, I take
Mm.
I just check it, and then I can actually explain to you what is actually going.
Okay. Yep. Thank you, Petra.
Thank you, Jess. Thank you so much.
Okay. Have a good day.
Have a good day too.
Yep. Okay. Bye.
Okay, bye, bye, bye.